Ripple decision is troublesome on multiple fronts, says former SEC official. Our Telegram group, which we will share airdrops and pre-sales soon, has been established. For instant crypto money news, you can use the Telegram link in the description section. Use the MEXC stock market link to buy and sell with zero commission in spot transactions. Former Securities and Exchange Commission official John Reed Stark spoke out against the recent ruling on Ripple Labs' case, calling the decision troublesome on multiple fronts in a LinkedIn analysis. Stark broke down Judge Analysi Torres' decision from July 13 by examining the grounds upon which she ruled in favor of Ripple, in a lawsuit brought by the SEC back in 2020, alleging that the company's XRP-XRPD token was a security. Judge Torres' verdict states that the XRP token was a security when sold to institutional investors, but that it wasn't a security in programmatic sales, public sales, and other types of sales, such as token distribution to employees. Ripple also faces a penalty for the alleged violation, as well as a rescission for institutional investors, whose sales reportedly involved $720 million. In the decision, Judge Torres argues that institutional investors reasonably expected that Ripple would use the capital it received from its sales to improve the XRP ecosystem, and thereby increase the price of XRP, while the investors who used exchanges to buy XRP tokens could not reasonably expect the same. For Stark, the decision establishes a class of quasi-securities that discriminates, based on the sophistication of the investor buying the token. The Ripple decision holds that the same exact token can be a security sometimes but not a security other times. And the more ignorance and willful blindness by retail investors, then the less protection the retail investors will receive. And the less disclosure about the token, then the less liability for the token issuer. That just can't be right. Stark also notes that this argument seems contrary to investor protection principles, which state that an investor's level of protection should not be affected by whether they read materials related to the purchase of an asset. Securities laws were specifically designed to protect individual investors, based on the idea that they can't fend for themselves. The Ripple decision turns this notion on its head, Stark noted. In the view of Stark, who served as an attorney for over 18 years in the SEC's enforcement division, the decision resides on shaky ground, is likely, and ripe for appeal, will likely result in reversal. The bottom line, stock is always stock, it can't transmogrify into not stock. So my take is that the SEC will appeal the Ripple decision to the Second Circuit, and the Second Circuit will overturn the district court's rulings related to programmatic and other sales, he noted. Judge Torres' ruling was received as a victory by the crypto community and Ripple. The company's CEO, Brad Garlinghouse, said during a recent interview that the SEC might face a prolonged process before having the chance to appeal the decision. In addition, Garlinghouse called the institutional sale decision the smallest piece of the lawsuit and said that an appeal by the SEC against the retail sale ruling would only bolster Torres' ruling. In a series of tweets by Fox Business's Charles Gasparino, he posed some questions regarding the potential $1 billion fine Ripple may face, following the recent legal dispute with the Securities and Exchange Commission, SEC. The question, reflecting the company's potential to cover the significant sum, revolves around whether Ripple would utilize their available $1 billion cash reserves, or alternatively, dilute their holdings of XRP. Gasparino highlights that analyst John E. Deaton had predicted accurately the nature of the verdict. The initial sales of XRP were deemed illegal, clearly breaching the Howey test, a legal principle to determine whether a transaction can be classified as an investment contract. However, secondary market purchases of the XRP cryptocurrency didn't violate the law. The outcome of this trial may well result in Ripple CEO Brad Garlinghouse having to foot the bill. Despite a partial win for Ripple, Gasparino's pessimism is evident in his assessment of the potential for Ripple to maintain its success upon appeal. He also points out that Ripple will still have to pay fines for the part of the case they lost. As reported by U.Today, the XRP price faced a sharp drop after an initial rally following the mixed verdict announcement. This price volatility underscores the ongoing uncertainty in the marketplace concerning Ripple's legal situation. In addition to Gasparino's tweets, John Reed Stark, a legal analyst, has criticized the court's decision, suggesting potential flaws and a complicated distinction between private and programmatic sales of XRP. Stark expressed concern over a new class of quasi-securities that change depending on the sophistication of the investor, deeming it unprecedented and inconsistent with the SEC case law. The Ripple case is far from over, as the SEC will likely appeal the decision, and Stark predicts that the rulings related to programmatic and other sales will be overturned. On July 13, Ripple Labs won part of its legal battle with the U.S. Securities and Exchange Commission, SEC, in the Southern District of New York's Federal District Court. Concerning programmatic sales on digital asset exchanges, Judge Analysi Torres found in favor of Ripple Labs, granted summary judgment, and found that the XRP is not a security. However, the SEC also had a win since the judge determined that XRP meets the requirements of the Howey test, making it a security when offered to institutional investors. Not surprisingly, the price of XRP shot up by over 80% and took other altcoins like Solana, Cardano, and Polygon with it, which all made impressive gains. With the partial loss of the SEC, especially with regards to crypto sales at exchanges not being classified as a security by Judge Torres, the question is how much will this influence other cases? The SEC had previously declared that most cryptos other than Bitcoin are likely to be classed as securities. With the clarity that XRP has now received, observers look to cases such as SEC versus Coinbase. James Murphy, also known as Metalawman, a popular crypto lawyer, said, "While Judge Torres' decision is not binding precedent, it is extremely well reasoned and will be cited in all motions to dismiss. This implies that the decision of Judge Torres may be persuasive, and affect upcoming judicial cases involving the classification of XRP or other such coins. This could prove crucial for Coinbase in its defense against the SEC. The SEC sued Coinbase claiming it served as a broker, an exchange, and a clearinghouse for unregistered securities. The SEC cited the U.S. Supreme Court's Howey test, a legal standard developed in the 1940s, supporting its argument that 13 cryptocurrencies listed on Coinbase satisfied its requirements. The SEC will now have a hard time showing that Coinbase sold securities, with Judge Torres confirming that XRP sales on exchanges are not more than mere asset sales where the buyer and seller don't know each other, also called blind sales. What is certainly something that other projects and altcoins have to pay attention to is the ruling in favor of the SEC, where the judge argued that the initial sales to institutions and investors are securities because most ICOs under this ruling would be seen as selling unregistered securities. Regarding Coinbase, Kraken, and Gemini's previous delisting of XRP, these exchanges have all stated that they intend to relist XRP or have already done so. This choice was made following a 3-year suspension of token trading due to the ongoing legal battle between Ripple and the SEC. The relisting shows that these exchanges have changed their positions, maybe due to recent developments in the lawsuit or their evaluation of the XRP-related regulatory landscape. As far as the old feud of the XRP community with Charles Hoskinson is concerned, a tweet by the Cardano founder seemed to be quite reconciliatory. "Well done XRP. One small step for XRP Nation, one giant leap for cryptocurrencies," he said on Twitter. In a recent Twitter exchange surrounding Ripple's impact on the price of XRP, former Director of Developer Relations at Ripple Matt Hamilton shared insightful perspectives on the matter. While engaging in a lively debate, Hamilton emphasized key aspects that shed light on the relationship between Ripple's holdings and the price fluctuations of XRP. Hamilton pointed out that Ripple is indeed the largest holder of XRP, possessing approximately 48 billion tokens. However, he highlighted that the majority of these holdings are kept in escrow contracts. These contracts release a portion of the XRP monthly, with Ripple only selling a small fraction and reinvesting the remainder into new escrow contracts. Consequently, Hamilton argued that Ripple's influence on the market is relatively limited considering the global daily sales volume of XRP, which stands at around 4 billion tokens. The developer then shed light on the underlying dynamics that really drive the price of XRP. He emphasized that market forces and the performance of Bitcoin podcast largely dictate XRP's price movements. In case of community offense, burn. Furthermore, Hamilton clarified that neither XRP nor XRPL is under Ripple's control. To emphasize this point, he suggested that if the community deemed it necessary, all of Ripple's holdings in XRP could be burned. In response to concerns about Ripple's significant ownership of the token, Hamilton reassured that this should not be seen as a worrying factor for the future. He explained that since Ripple operates just one validator, the community holds the power to vote for an amendment that would effectively burn the company's holdings if they acted against the community's interests. Our Telegram group, which we will share airdrops and pre-sales soon, has been established. For instant crypto money news, you can use the Telegram link in the description section. Use the MEXC stock market link to buy and sell with zero commission in spot transactions.